Hello, everyone. This is Stock Market Daily. Thank you for joining me today. Today is April 20th, 2023. As always, this is not financial advice. Please don't copy my trading strategies because you will lose money. This is only for educational purposes. Okay, so as you could see, we're looking at the SPX chart, which is the S&P 500. And like I said yesterday, we're going to have a down day today due to Tesla earnings. And, you know, Tesla weighs pretty heavily on the S&P, and it was just inevitable that we essentially were going to have a pullback. We had a bunch of days that we were up, and with Tesla's earnings being the way that they were, the market wasn't happy, and it just showed the market that the stocks will go down and can go down. So this was almost expected. Even though we gapped down, we did pretty much, we slowly but surely almost reached the closing price of yesterday. We never quite got there, and perhaps that's why the market started selling off towards the end of the day, and we had a pretty strong, significant pullback. Over here, it seemed like we might just recover a little bit and kind of stay in this 140, 130 range. But again, we gave up towards the end of the day here, and it flushed down all the way to 41.14. So the 4100s are back in play. And as per usual, at the very end of the day, we did have a nice strong rally into the close, ending at 41.30. So we look at the trades today. I placed three trades on the put side, so I sold 3 contracts. One of which, one of which is still here. You can see the 40.95 is here, and I sold that one for 130. And the other one that's not here is the 41.05. Now, at the end of the day, when we were really coming down, I know for a fact that we're still pretty far away from 41.05. Even at the lowest lows, we were still pretty far away. 41.14 at the lows. And I was waiting for this, as this was happening, I was waiting for a nice green shoot like this. I was waiting for something like that. And essentially I thought this might be it. And when this failed and we started hitting a new low, I decided to buy back my options. So for the 41.05 options, I got paid $280 only. Again, the premium is really low these days. The VIX is low. The implied volatility on the SPX is low. So collected $280 in the morning and bought it back for $65. And there were 2 of those. So not much collected on the put side. Okay. Now on the call side, we were kind of all over the place today. Gap down, went back up, then went back down, started running up again. Just to be safe, I bought the 41.40 back. So 3 of these were actually from yesterday. They were rolled from yesterday. The 41.40 was here. And just to be on the safe side, I bought that back, and it was only $5, but still, that's, every transaction is eating away at your daily profit, including commission and everything like that. So I bought it back just to be safe. And, it very well could have came back up just a few, had we had more time, or if the candles were stronger, or had we not had this pullback and it just continued up like we've seen before, could have been trapped again in the money. And I definitely don't want to do that. Even though if we would have been trapped, it probably wouldn't be significant. But regardless, I bought it back for $5, not a big deal. These 2 here, these 2 call options were, again, rolled from yesterday, and they were clearly not going to go in the money back today. So I just let them expire worthless. The only option that I did place sell today on the call side was this one, the 41.60. And for that one, collected let's see. For that one, we collected $115. So again, not much premium. So you can see that all the transactions are here. This right here was a Meta roll. I'm deep in the money on Meta. I was selling covered calls, and I rolled it out to by a few months and collected at least $125 on that roll. But that's that. So not much. I'm happy I'm finally out of these call positions because I've been rolling them since last week. And if you've been paying it, following along and kind of seeing how I'm doing this, I've been collecting a good amount of premium on some of these when I roll them. And obviously today there wasn't any rolls, and there was not, there's only 4 options that I sold in total, and the premium was low. So for the day, the total was $680 when we do all the subtracting for the buybacks and everything. So $680 on a day, fairly low, but there's nothing you can do about it. I'm glad that I'm out of the trap positions, not holding any risk overnight. Really quick, we do have these credit spreads. Let's expand the view here. Should be enough. We do have these credit spreads that are performing very nicely. Now, if you haven't been following along, I placed this trade while I was bored. I was just kind of looking through the chain, and I thought, hey, this might be a really good deal to place it here. I collected about $1,000-something on this trade. So I sold this option and I bought this option as a hedge. And now this one is worth 135. Actually, when the market's open, this was worth about, at the low side, it's about $105. And you could see that there's not much left on the premium. So there's about $100 left on the premium. We have 15 days left for this option to expire worthless. And we've collected already $938. So I think tomorrow, if it doesn't shoot up, I might close this out. Simply because there's a theta of $28 a day, so it's going to be decreasing by $28 or so per day. Obviously, as the market moves up and down, this is, it's going to change. But I think once it hits like $90 or $100 on this option, I'll buy it back. There really isn't a point to hold it for that long, for half a month, basically, to collect an extra $100. You can, but why? I mean, you collected pretty much everything. We're up. Let's see. Does it have a percent on here? No, I don't have a percent. But anyway, so I mean, there's just no reason I feel like to have this going. Could open another one. Just need to have the market move up a little bit. Once it does, we could open another one of these credit spreads. There is another one that I opened up a few days after, about a week after that one. And this one's doing equally as well. This one is now $500 something. Let's see, there's right here. We have 21 days left on this option. The trade price was $11.25. So now it's $510, it says. And we are up $1,228 on these two contracts. So you could just keep going down the chain, select something that's about 30 something days away from today's date, and kind of do the same thing. But obviously it's better to do it on the days the market's up, because as the market just kind of trends along in the same price or goes down, that's when these options really start to lose their value. Now, if you're going to buy on the down day, if you're going to sell it on the down day and the market shoots up, you might see, something you really don't want to see, where this option is going to increase in value exponentially. So, but again, I mean, what are the chances that we're going to hit 4,300 here within next month, unless all the companies are going to do really well. That may happen, but I personally, I just doubt it. So, but I think before I open up another one of these, I will wait for the earnings to be mostly over. Tomorrow's Friday. We don't have much earnings tomorrow. Monday, I don't believe we have anything else either. But during the week, next week, we're going to have a lot of the big tech companies, the heavy hitters, come out. So once we're through that, maybe we'll see how it goes. Maybe I'll start opening up more of these. Perhaps maybe on the put side as well. It doesn't have to be just on the call side. We were just at not all-time highs, but we were at highs for a couple of past months. So that's why I decided to do it on the call side. So that's it. I hope you guys enjoyed this episode, and we'll have another one tomorrow. All right, thanks. Bye-bye.